And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a bright and early Halloween. Happy Halloween out there. A little Halloween humor here, right? So what if you did this costume? You dressed up as transitory inflation. You go to that Christmas party, that Halloween party, and you either leave early or you stay late and refuse to leave. That would be our transitory inflation joke for the day. Anyways, major move has been brewing over the past week or so. And I want to bring our eyes to the US dollar. I was driving in this morning saying I'm getting bored about talking about the dollar, but it is King Dollar, and this is the chart to rule them all. And I did say last week that with any kind of a daily closure above this wick right here, that would confirm hidden bullish divergence, and very, very likely we'd get a shot to the 618 fib, which is going to be right at the top side of the range, this line at 112.307. I know we were talking about this green box last week, saying, hey, very likely going to come down to that box based off of the bearish divergence on the weekly time frame. But this is the most pain. What is the route of the most pain in the market? It's this very thing right here. Kind of goes up and down. And I am going to draw another box here, a little box of peace and prosperity, or death and despair. And the death and despair for Bitcoin would be, yes, daily starting to close back above this green box. Would not be good for risk assets, in my opinion. That's why the market is pulling back today, as the dollar is putting a bit of a green candle up almost 1% today. And that was confirmed on Friday with this closure here. Bear with me. And so I think I even said it, very likely bounce early next week, and then we probably hit some resistance and come back down. And that is all hinged upon not tomorrow. Is it tomorrow? No, it's Wednesday's Fed meeting. And kind of the news I'm hearing in the pipeline right now is that the Fed is going to be more hawkish. All the data points say nothing but this, that the Fed needs to remain hawkish to fight inflation. Last week, we did have inflation come out hotter than expected. We had GDP come out hotter than expected. And I believe it was consumer spending. Consumer spending and sentiment was just stronger than expected. So again, a little bit more of bullish things for the dollar, bearish for traditional assets. So what am I trying to say here? So I guess I'm going to go to my, 4-drive philosophy here, and that is 4 drives of hidden bullish or bearish divergence. We're going to look for a bounce to, that would be the 1618 fib, and that would be all the way up here. And how would that look? Bear with me just a second. Putting my thoughts together. If we have the 4 drives, we'd have to come all the way back from this pivot right here, and we'd have to have 4 higher lows accompanied by 4 lower lows. So let's just take a look from this pivot right here. Do we have the 4 lower lows? Yes, we do. So from this pivot, we've got 1, 2, 3, 4. This would be the 5th one, actually. 5, and a bit of a good bounce being put in there. So 5 drives of hidden bullish divergence. Let's say we only had 4 drives. We'd expect a shot up to the, wow, that's 116.70, and that would be in line with Bitcoin taking a bit of a spill this week after the news. But as some have been saying, no news is kind of good news for the Fed. If they just come in and do what they said they've already been saying they're going to do, and that's, raise basis points, another 75 basis points, then that could be seen, okay, market's already priced in. We get a Christmas rally. But if the Fed does come in more hawkish and maybe throws us a 100 basis point rate hike or something nasty, it's really hard to tell. That's why it's so important to follow, in my opinion. Whether he comes out, if he comes out dovish, the market could get a, significant bounce. Anyways, just putting my thoughts out there. So again, we were looking at this target based off the weekly bearish divergence. Let's see if that's still in play. And yes, we did close with the bearish candle, getting a bit of a backfill, and I suspect that's all this is. If we do start closing dailies back above 112, yeah, then I am looking for some of those, higher targets to get hit over time. But I think I said last week, I drew it out like this, right? Bounce first, then come back and test that box, and then see what happens, judge it from there. But I do imagine if we get some bearish news coming out around that GDP. Yeah, so that's what this lines up with, guys. Again, today, dollar rallies. Tomorrow, pulls back. Bitcoin rallies into that FOMC meeting. And, excuse me. And just something else I was looking at, guys, is we haven't had an official test of this breakout trend line. Sorry about that. Screen, give me a little hope here. We have not gotten an official test. Oh, we kind of did. I mean, close enough is close enough. If we went... So you're looking at a break and then a retest, right? So we kind of grinded up against it, broke out, and that is the retest right there. I mean, that's close enough is close enough. But we haven't literally smashed into this trend line yet. Almost got it to a T though. I'd say, yep. Very, very close. But if this does confirm as a local high, I am looking for some bearish divergence. And where would that be coming from? And I would really confirm this as a local high. I mean, anywhere below this pivot. But if you're more conservative, you wait for about $20,000 to confirm this as a high. I mean, anything below this pivot, for me, that's confirmed as a high. We've got momentum turning down. How's the 2-day look? 2-day will cross down below 19.5. That is going to be a critical area if this rally does fail. I think we could have one more split up to this green 55. But looking a bit droopy here. And if we start to lose, again, that 19.5 region, very similar to what XRP just did on a shorter term time frame. If we do break back below this trend line, that'll be game over. And some of those downside targets expected to get hit. What else did we confirm this on the weekly time frame as a second drive? I mean, so this is the bullish case. So there's bullish news and bear news, right? So, what could I see happening? Market comes down here, throws it up here, and then we get the big move down. We want to see whatever the most pain is going to cause in the market, but I want to narrow it down. We're 9 minutes in the video, and take a look at CMEs really quick here. CMEs. So, and I am getting a bit of a sell signal on the 4 hour as we put in additional drives of bearish divergence coming all the way back from this pivot right here. This looks a bit like a double top here. And we had several drives of, do we have the bearish divergence? I mean, not really. Between this point and this point, that's one drive. Not a whole lot. Volatility is crossing up. This is crossing down. So again, with the short-term bias for the dollar to head up a bit more, that does give us a little bit of a bias that Bitcoin could come down in the short term. And this is typically where you do want to see the bounce. I mean, we did have a bit of a trend reversal, and then it backfired in everybody's face right there. So on the 4-hour time frame, we broke above, we tested the trend line, came up, and then broke back down below, giving us the bias at least for short term, coming into that green 55. And this will confirm, 2 drives of bearish divergence. Should give you a shot to the bottom side of the range. We're already pretty much there. What else? So, could we get one more shot back up here to about 20,860 and then play out a little bit more? I would like Bitcoin to put in a higher low somewhere in this region around 19.1. The problem is if we start to break back into this range, could get stuck there and head to the bottom side of the range. So right now we're kind of in our own little range, and something I've been noticing is the price action likes to gravitate towards where the wicks are, or right above or below them. So like right here, right here, right here, price action is going to get drawn to those wicks over time. So what am I getting at on the daily time frame? And we will have significant bearish divergence if this does confirm as a local high, and it would all be but confirmed with a daily closure below this wick. You could front run it with a closure below this wick, or any kind of a closure below 19,583. So we are quite a distance away from there right now. Let's check in on spot price action. So it needs to confirm a high or a low. How would we confirm this as a local high? Any kind of a closure back below 19,965. I'd be looking for a test of this trend line with the opportunity to pick it back up again on the weekly time frame. That would just be a bit of a backfill back down to about 19.5, and then we could play the rest of the run up to the top side. And that's kind of the general rumor around the markets right now is, just want to be prepared for the threat of a bigger upside move. And that would be hinged upon the US dollar coming down a bit more from where it's at today. Something else I did want to point out here on the on the 2-day time frame for the US dollar. Two-day time frame will confirm another drive of hidden bullish divergence. I guess coming back from this low right here. So no, that is a higher low. Let's see if we have it coming back from this low right here. And yes, indeed, we will. Would you count that as a local low going all the way back from this guy right here? Would you consider that a low? I would. I mean, technically it's not really a low. Yeah, it is. Yeah, that is a low. Why? That's a high right there. There's a low. Bottom side of the range. Pivot on the market right there. Okay, so let's confirm our bias today in another 8 hours. And I'm going to draw this out for you guys, and that way you can see it. So you can see right here, 3 lower lows in RSI. In comparison, you have 1, 2, 3 higher lows in price. So I'd be looking with any kind of a closure today on the 2-day time frame above this wick. I'd be looking for a shot to the top side of the range. So that's going to give us, you know, a target up here a bit higher, which if that begins to get going, I mean, that's back above 112. This could be the reversal. 2-day, the reversal signal, at least for the dollar. And I would mediate that with a daily closure back above this major trend line. And yes, I would be looking for a minimum shot to the top side of the range at 114.43. And then, you know, we can see if we can put in a higher low or not. Okay, what else did I want to bring up here today? News from Michael Burry, right? So that's the bullish case for the dollar on the 2-day time frame. So we can kind of see where the market may get bullish or bearish based on the US dollar, right? If the dollar breaks out to the top side of the range, you know, in general, I expect assets to cool off, which we had some pretty bullish closings last week on the NASDAQ. I mean, that is a bit, that could be a gravestone or a shooting star on the weekly for the NASDAQ. Let's see what fib we came up to. So a weak bounce up to the 382, not strong. This guy got up to the 0.5. And I think the Dow busted out the strongest bounce of the entire market, which is going to be up to the 782. So that's the only bullish look there. We did say on the daily time frame for the Dow, we wanted to see an open and closure above this pivot, which we did not get an open above. Okay, here's was the first open above. So, you know, open above, closure above, gonna be a little bit more on the bullish case for the Dow Jones specifically, but the other cases are looking a bit more bearish. Okay, what else did I want to bring up? CMEs. The signals of the year. So bearish divergence will be confirmed. We'll look for a shot to the top side of the bottom side of the range if this closes anywhere below here. In fact, what I think is more likely than not, maybe another day of ranging, but momentum will turn to the downside below 19,583. That number will rise tomorrow, in a sense. So what else? Yeah, that'll be multiple drives on the daily time frame. 1, 2, 3, 4, 5. Yeah. So a lot is at stake here. And as far as right now, I mean, we should still be biased to the upside with volatility above 20%. Stochastics to the upside, momentum to the upside. But did we get a 20% move, right, from the bottom? No, we got about a 9% move. Yeah, 9% move. Not horrible, right? And kind of towards the lower, I think the second deviation type numbers, which I did say, hey, maybe this rally could get faded, but any kind of a daily closure back above 21,000 looks like a run back to at least the highs of 22.5, somewhere in that range. Let's see where we're at on the Bollinger Bands. We're getting into this video 20 minutes, rejecting the topside Bollinger Band, or excuse me, Trollinger Band. So what is the route of the most pain, right? Maybe put in a run up to this wick right here and then back down to these wicks right here and some more sideways action. That would be the most pain route. Max pain. So the Fed is looking to increase pain in the markets, and I think most people are not even quite aware of what's going on with the real estate market and how much pain it is about to be inflicted. But I wanted to bring this quick little update to you guys and just kind of give you some bias busters on the daily time frame. Any kind of a closure below 20,000, I'm looking for this thing to probably very likely retest these wicks down here. Any kind of a daily closure back above 21.1, looking for a run at the highs. Based off the weekly closure and the confirmed bullish divergence, we are looking for a shot to the 21 at 22.5. And that would be if the US dollar puts it in a lower high, holding this trend line down. That would be the only chance for the bulls and the bullish bounce to play out. If this thing does get rejected here and comes down to this box, excuse me, that's what we want to see happen for the bulls, right? We want to see dollar get rejected here, come back down, and put in a lower high right there. That would line up with Bitcoin taking another maybe 10% bounce. You know, again, this isn't financial advice. I'm not a financial advisor, just giving my thoughts on the market. Lastly, so dollar down, good for risk assets. Dollar up, bad for risk assets. I think we're going to be able to tell a lot based on today's closure. Last part here, Ethereum, so rejecting at the 21. So, you know, very similarly as we got these, we were expecting that move up to the 21, very similarly to what we're expecting on Bitcoin as it confirmed a drive of, and this move could even get going up to the green 55. And I do imagine if Bitcoin does take another 10% leg higher, well, you know, Ethereum probably matches that with a pump at least. I mean, that would be 20% on Ethereum. Yeah, so green 55, definitely a threat there on the weekly time frame. Bollinger Bands are pinched. We got some of the lowest volatility ever for Ethereum, so big explosive move going to come out of Ethereum. Fake out week. Oh yeah, Dante's Descent, the guy from Market Makers. I've been kind of checking in on some of his theory and following this candlestick pattern, which we've been talking about briefly here on the show, like this is a show, guys. Right here, here's what I want to talk about briefly again. Let's see if I can get all my tools off. Okay, here's what it is. We've had 11 weeks down, 9 weeks up, 11 weeks down, 9 weeks up since the peak of the market. So I'm just going to count them out. And this will just show, I mean, this is the week. We've been talking about it. Halloween, October 31st. This would be it, the week for the bottoming candle to come in effect. And it would be quite a nice fake out, I think, as everybody thinks Bitcoin has broken the range of the upside. They're going to throw it in everybody's faces. Honestly, I wouldn't be surprised because that's exactly what the market likes to do. But just to put this in perspective on the weekly time frame, let's use log. Yeah. Did we break this pattern? Essentially, we did. We broke the major trend line on the weekly time frame, putting in a higher low, even on log scale. So, but not the pattern I'm about to show you here. And here's what it is, right? So from the peak, we got exactly 11 bars to the low. So I'm going to count them out for you and then show you. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I'm just going to mark that off. Then we got, so 11 was a, so let's count it again. That's going to be 1, 2, 3, 4, 5, 6, 7, 8, 9 to the next peak. Okay, so 11 bars down, 9 bars up, exactly like we had spoken about. 11 bars down, 1. Yep, I'm just going to draw it out here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 9, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. And 11 more bars, 11 more bars. This is where it should be. 1, 2. Was that the peak? Yeah, that was the highest point right here. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So are we going to hit this green box? Is it still possible? Very much so. Pattern's still intact until proven otherwise. But you want to be prepared with the threat of an upside move, and that's why I'm bringing all this up here. But where, how do I mediate, how do I mediate whether to be bullish or bearish when you have a slew of lower lows and lower highs? It's still okay to be bullish. It's still okay to be bearish. Just depends on where your risk management is. I'll leave that for another day. But as far as the weekly time frame, again, the most route of pain would be, hey, test this green box and then come back down to this green box. These are just statistics and probabilities. They're not guarantees to work out. But I do suspect, based off of this, 11 bars down, 9 bars up, 11 bars down, 9 bars up, that we do get a bit of a, so I got a meeting here shortly, so I do imagine we get a bit of a red candle. And I wouldn't be surprised for this week to just totally shaft everybody. I think this is going to be one of the weeks of volatility that we've never seen before. And as NASDAQ putting in a weak bounce, Dow's the only one. Dow is the only one putting in a strong bounce, and if you go up there, we're still stuck at the 0.5, so could we get a run at the 618 one more time? This is your ideal risk to reward scenario in a sense, this topside trend line. Could we get a little bit more? Maybe, possibly, but we're right at the 0.5. A 618 stab is not out of the cards here. But with the dollar putting in this bullish divergence on the 2-day today, I would say risk will remain to the downside. If we confirm this as a higher low, I'd be looking at a first shot at this trend line. If it breaks, second shot at 114, and then we're talking a whole different dynamic from this, pity bounce we've seen in the stock market and in Bitcoin over the last few days. That's it for today, guys. Have a blessed day. Take care. Signing out.